think, first of all, I really enjoyed your discussion on the fundamentals and bond yields. I think that was a good summary of what's going on. In part, I'm estimating 170,000 in terms of job gains, and there are some reasons behind it. The NFIB Small Business Survey talked about increased hiring. The Consumer Confidence Survey from the Conference Board talked about net jobs available improved, and jobless claims continue to stay remarkably low. And I think in part, what you're seeing is the markets are reacting to the news, as you mentioned earlier, that is stronger than what they expected. So the commentary about why the bond market has moved off so much in terms of rising yields, it's because they expected Fed easing in 2025, and that expectation has been diminished. They expected slower inflation. That also has diminished in terms of probability. And so what you're seeing here is a strong job market that gives you 2% plus economic growth and doesn't provide a good case for the Fed to ease, certainly not in January, and probably not in March as well. So when you're talking about your fundamentals, which I really enjoyed as an economist, you're seeing a stronger job market than what the market had what the financial market had expected at the start of the year.
John, the market assessing some of those macroeconomic dynamics often says, well, stronger economy, that is great news for corporate profitability. It is great news giving us some cover to buy US stocks. But in the last number of sessions, it feels as though that good news has now gone to bad news. If we look at the bond market reaction, and it was a great piece yesterday, I think it was the Wall Street Journal talking about whether we're now at the point where any stronger economic scenario is in fact bad news because it just brings more inflation, but no more economic benefit.
Yeah, it's fascinating, and you're right on point. Sometimes when we see the market dynamics, information that was taken as positive now becomes a negative. And you're quite, in my world anyway, I'm seeing that the economic growth is just too strong for the Fed to ease. The inflationary pressures continue to move forward. We saw that with, for example, the ISM services numbers, the ISM manufacturing prices paid numbers. So yes, at some point, the good news continues in terms of the economy, but it's not good news for the market when the market expects Fed easing, they expect lower inflation, and they're not getting it.